Hello, I'm John Kreitler. Welcome to This Week in the Markets. The bond and stock market took its cues this week from Fed officials speaking prior to the Fed blackout period before the December 12th and 13th Fed meeting, the last for 2023. In particular, Fed Governor Christopher Waller, known to be a close confidant of Chair Powell, turned markets around earlier this week. He talked about the idea that inflation is on a downward trajectory, data is looking good, interest rates are sufficiently high enough and restricted enough, and all else being equal, he could see the Fed cutting rates sometime next year. This created a bond market rally. The 10-year Treasury went down to 4.25%. Remember, not too long ago it was at 5%. The 2-year also is below 5% at 4.8%. Again, it was hovering close to 5.15 not too long ago. Yield curve is inverted, but interest rates have dropped. In response to this, the stock market rallied. Stock market indexes is near one-year highs for the NASDAQ, the S&P 500, and Dow Jones Industrial. But the one thing I'm looking at is gold. Gold has stayed over $2,000 an ounce, not too far from all-time highs. Though the bond and stock market is looking for a soft landing and the Fed cutting rates next year, possibly, gold is staying resilient. Interesting to see the relationship between gold, interest rates, and the stock market going into 2024, in particular at the end of this year after the Fed Chair Powell and his comments and press conference after December 13th decision. I'm John Kreitler. This was This Week in the Markets. Have a great week.